Hi everyone, welcome again to another business financial analysis video with myself, Moeed Amin, and my colleague, Ted Wayman. Let's get right into it because today we're looking at Hurricane Energy. Now, the name might make you think this is a wind energy business. It isn't. It's an oil exploration business. So they're in the business of exploring, appraising, developing hydrocarbon resources in what they say is naturally fractured basement reservoirs. So rather than traditional oil exploration businesses where they probably dig around and then fracture the basement in order to extract the oil, these guys claim to look at and only really looking for naturally fractured reservoirs. So interesting business to look at. Before we dive into the share price financials, let's send out a quick thank you to one of our viewers who recommended and requested us to look at this particular company. Here you go now, this is your video. Before we dive in, let's don't forget to like, share, subscribe, as Nav hopefully may have done. If you're a subscriber, you will get instant notification of when we publish your video. Quick note on the share price before we look at the financials. Now, this company's gone through quite long periods of ups and downs in its share price. And in the last 6 months alone, the share price has risen by 354%. In May of this year, which is 2021, they reached a nadir of 0.6 pence. And that's English pence, British pence. So, not for the faint-hearted, and we're going to go into that in a few minutes later, so stick around for that. But certainly worth looking at. Now, Ted, let's dive into this business because there's quite a lot going on, and we're having to summarize it quite a bit in the short space of time that we have. What did you find out about this company?
Well, thank you very much, Moeed, and yes, welcome. And we are going to be looking at the financial analysis. So let me preempt a few comments when somebody posts and says your analysis is very out of date. You're right, the analysis is out of date because we're going to be looking at the 2020 annual report, and right now it is October 2021, and this company, there is a lot going on. So this is very much a backward looking historical look at the business. We're going to be looking at the financials and their financial strength. However, you're welcome to point that out in the comments. Please do so politely. So let's have a look at their financials. So very easy to find. They're on their website. Here they are, and lots of pretty pictures. And we're going to scroll all the way down to the actual financial statements. Now, as you mentioned, there's a lot been going on in this company. And so the numbers we're looking at is kind of telling us what has happened in the past. So here we see their revenue statement, so the profit and loss account, and what we notice here is that the profit, the gross profit, has dropped significantly. So they're making sales of about $180 million. Cost of sales is about the same as 180 million, so they're not really trading. So this is kind of the cost of extraction. They're not really trading at a profit. However, what we notice here is that they are making a loss, and the big loss is this number here. So this wasn't in the previous year, and it is in this year. And this is the impairment of oil and gas assets. So this impairment is effectively the write-down in the value of one of their oil fields. Now we can go and have a look at that in note 2.3 because that is a big number, and see exactly what is going on with that. What is the reason for this impairment? So let's go and have a quick look at note 2.3. And so here is note 2.3, and it talks about the various ways of assessing a business, and what they are looking at here is effectively a big write down in the value. So here we see impairment of oil and gas. So this is this orange box is a discussion about what they're looking at and why they're looking at it, and the need to be able to do that. And then we look at the sort of various scenarios. So in effect, what they're doing is they look at their oil fields, they work out, is it worth continue exploring? You know, do we think there is value in that oil field in terms of kind of discounted cash flows? And you'll see here, you can see a number of different scenarios. So do we wind it down? Do we just do no further activity? And then a couple of other scenarios where we need this where there's an investment case. Now, in looking at this, the directors are kind of, you know, they're looking at the various options. They're doing a kind of probability weighting, and they're trying to work out the value of the asset. And what they realize is that the value of the asset is not the same as what they're carrying it in their balance sheet, and therefore they need to write it down. So just an accounting adjustment, doesn't affect the cash flow. However, what we do notice in here is that there's a note here now about the group's financial restructuring. Okay, and this takes us off to note 7.4, and it talks about this potential for financial restructuring. So I think while we're here on a little audit trail, we'll go to 7.4.3 and see what that is all about. So here is note 7.4.3, and it's talking about the proposed financial restructuring of the organization, of the business. In effect, they give the kind of the two main aspects are a debt for equity conversion. So in effect, what they want to do is that they want to convert the debt, the loans that the business has into equity, and that's going to release a lot of the financial pressure on the business, and then come up with a kind of a revised strategy for the business, and then especially in terms of the Lancaster oil field, which is the field that has been impaired or reduced in value. So let's go back to our original financial statements. And just kind of finish off our analysis here. So we've got this big impairment going on, which is the write down in the value of the asset. We notice that the finance costs are very, very high. So they're paying a lot of interest on the debt that is funding the business. And again, that is lending this weight that says we need to reduce this debt. We need to do something about it. And that's really driving this loss. So what we can see here is that in the past, you know, they were making a profit, you know, not a massive profit, but they were making a profit. Whereas in this year, they've made a big loss driven by that impairment. Although you can see that without the impairment, they'd have still have made a loss anyway. And this is starting to kind of drive this need for a restructuring. If we look at the balance sheet, again, the balance sheet, we can see this, you know, there's the impairment jumping out at us in the non-current assets. So this is the value of that oil field. They've reduced it in value, and hence a big drop in the value of the non-current assets. Current assets, we've seen a small drop in, and you'll see that the cash has come down a little bit. They're still sitting on lots of cash, so it's not a major issue. However, if we look at the bottom part of the balance sheet, here we see the bonds, and we'll notice that the convertible bond, there is that debt sitting there that they're looking to try and do a debt for equity swap. So the aim is to take this debt and plug it down into the equity down here, and that will just increase the net assets of the business and effectively give it a little bit more headroom. However, it's got a positive balance sheet, so all is not lost. If we look at the cash flow of the business, statement of movement in equity, not a lot going on. They're obviously not paying any dividends. In terms of the cash flow, they are generating cash. Okay, so this company is generating cash, and that's good because it's going to keep it alive. And then they're using that cash to invest in investing activities, and there's a little bit of financing going on. And you'll notice again, this interest they're paying on the bond is fairly significant and is straining a little bit their cash flow, and that's another reason for wanting to convert it. So they're sitting on cash. They've got cash. It's not looking absolutely disastrous. However, what's interesting is if we go to the auditor's report, and we'll just find the key part of the auditor's report. they talk about the going concern within the auditor's report. So right at the beginning of the auditor's report, they are going to comment on some of the key matters, and here we have their note on the going concern, and here they talk about the proposed financial restructuring is dependent on all required court and regulatory approval, etc., and the bondholders. So the bondholders are sort of nervous they're going to take a haircut, and so that it's dependent on their sort of signing up to it. So they say that, you know, it's still a going concern basis, but this it does cast doubt on the company's ability to continue as a going concern, which is quite interesting. That so they're really saying that, you know, and again, the write down in the oil field was dependent on the oil price. It was done at a time when the oil price went tanking right down to the bottom, and so this company is at the end of 2020 really sort of slightly in the doldrums, scratching his head and wondering what happens next. Worth just checking the date of the auditor's report. Obviously it won't have been on the 31st of December. It'll have been a little bit later on. And here it is. If we can just find it down, here we go. So it was signed off in May. So as we talked about it, you know, the company, you know, there's changes afoot, and let's see what happens. So actually, we don't usually do this when we look at the financial statements, but we will look at the interim. So this is the latest set of financial statements available on the Hurricane website, dated 14th of October. So date now is 28th of October. So this is only a couple of weeks ago. And what we start to see here is that the revenues from the Lancaster is now kind of, you know, it is looking pretty positive, generating cash, and they're making a profit after tax. So what we kind of see here is that, you know, as the oil price has rebounded, so Hurricane Energy has rebounded. So this looks like a massive sort of almost a leveraged play on the price of oil. If oil goes down to zero, these guys are going to really struggle. And if oil starts to go up, these guys are potentially going to do very, very well. What's interesting here is the comment on the corporate. So the company's proposed financial restructuring was ultimately not pursued following the High Court judgment. Incumbent non-executive directors resigned, and we had new directors put in place to replace them. And the company has done a repurchase of some of its bonds. So the company is using cash to repurchase the bonds. So rather than doing a debt for equity swap, the company just effectively buys its own debt and cancels it effectively. You know, quite a positive outlook, again represented on the share price of the value of oil in the market. Okay, so if we just whiz down and look at some of the key financials, here we are. So here's the income statement, the profit and loss account. So we can see that, you know, for the 12 months ended 2020, revenue was $180 million. They're already for the first 6 months up to $124 million. So if they carry on that, they'll hit $250 million. They are trading profitably. A little bit of overheads, so they're making a bottom line profit. The finance costs are still in there, but they're coming down as they are starting to buy back their own debt. So they would expect that, you know, as they've completed that debt buyback, those or you know, started the debt buyback, those financing costs will come down, but they're still posting a bottom line profit. So this is a real kind of turnaround story from a company that was, you know, actually posting in its accounts and says, we are a going concern, we're not sure we're going to be around for the foreseeable future, to actually say things are all, you know, we've made a change of the board, the oil price is back in play, things are looking pretty rosy for us. You'll notice the balance sheet, again, that bond is still there. So it's come down a little bit from 2000 at the end of 2020, but it's still there. So, you know, they have started that bond repurchase, but it hasn't actually been completed yet. Otherwise, you know, we've still got that kind of that low non-current asset. So the impairment's been done, that's been written off. That's kind of, you know, water under the bridge, so to speak. They have got lots of cash in the bank, 170 million. Their current liabilities are pretty small, so suddenly this is looking a pretty healthy balance sheet. They've got a lot of capital in there, and they're sitting on lots of losses, but they've got a nice, strong, healthy, positive balance sheet. And again, as I said, looking to reduce that debt. And if we look at the cash flow, again, they are, they got good, strong cash generation, which is fantastic. So they are generating lots and lots of cash. They're investing in the business, and they are not issuing any more shares, which is good. And you can see they're paying the interest, and there's a little bit of a cost in terms of their corporate finance activities, which is again all about quite a significant amount of fees paid to the bankers to help them with all this restructuring. So I guess this is kind of quite a turnaround story for this organization. So let's look at the share price. So if we look at the share price, if we go back to sort of when its whole historic, it's been a very rocky ride for this organization. And this was actually yesterday. I took this, I did this screenshot, and it was trading at, and it's 5p, not 0.05p, by the way, but it is 5p. And you can see that here the share price starts to tank. So at the end of 2020, suddenly, the oil price is going to zero. These guys are in the doldrums. They're in real doo-doo land, and really we're kind of sort of thinking they're just not going to survive. And so what's interesting is that if we zoom in on a little bit more sort of what's happening recently, so here's a sort of slightly more update of the year. What we can start to see is that since those doldrums, actually we're starting to see a steady increase in the price. Now what's interesting is even between yesterday and today there's been a significant movement, and so it's gone from a share a market cap of 100 million to 96 million. So it's just dropped by 5 million literally overnight. So this is a volatile stock. This is a kind of a leverage play, as I say, on the oil price. This is definitely not for the faint-hearted, but is this an opportunity investment? Well, I don't know if it's cheap or not. It's difficult to, as many of our viewers keep pointing out, it's very difficult to value an oil and gas company such as this based on its financials. So we're not basing our valuation on the financials. What we're doing is looking at the financials to say how strong are they, how well can it weather the storms and the ups and downs and the trials and tribulations and turbulence of operating in this market. And it looks to me like the financials look okay. They look pretty solid. So whether you want to buy into this company really depends on the stories that are coming out about it, the kind of the opportunities, whether you buy into those opportunities and see value in them. So there's my analysis, Moeed. Hopefully that kind of, I'm not sure that's necessarily sheds any reflection on whether it's a buy or a sell, but certainly one of the more interesting set of financial statements, let's put it like that.
Yeah, for sure. And apologies for that mistake. Yes, it was 6 pence, says there Nadir, in May. We've mentioned it before in this one. It's worth mentioning again. In your investment thesis, do note out that they are indicating that they're reaching a bubble point in their flagship Lancaster oil field. Basically means it's getting close to running out, or at least the timelines for running out are a lot sooner, which is probably part of the impairment charge. So, have a look at that as part of your investment thesis. Up to you whether it's a buy or a sell right now. But hopefully you've enjoyed this analysis. Do again, like, share, subscribe. Let us know if you want us to analyze a company for you. Leave a note in the comment section and we will get round to it. But until the next video, thank you, everyone. Thank you, Ted, for your analysis.
Good to see you, Mary. Catch you later.